Thank you very much for joining us today. My name is Corey Daharsh, and my colleague Larissa Greene and I are here to bring you today's educational webinar on international investments with your self-directed IRAs and solo 401ks. So again, we are Corey and Larissa from Advanta IRA. We've both been with the company for a number of years now. I'm going on my 8th year. Larissa's got about 4 or 5 years, even more than I have. But we've done a number of different roles and responsibilities with the company, and we both currently are on the business development team, where we do educational content, networking, and just really sharing and explaining to people how easy it is to use these self-directed retirement accounts and how unique the investments you can hold are. With the purpose of today's information about how to use them actually investing outside of the US in various different asset classes. So Larissa, thank you very much for joining me with today's webinar. I look forward to providing some great education to our audience.
Yes, thank you so much, Corey. It's going to be a great topic. We try to cover it, once a year probably. And I think it's a question we both get kind of a lot is people are interested in finding out how they can make these investments. And I guess because it's a US-based retirement account, they think, okay, well, I must have to make US-based investments as well. But we're going to talk today about what we've seen in self-directed accounts.
Perfect. Well, thank you so much. And we're going to move forward just with a basic explanation of what Advanta IRA does and what a self-directed account is. And then we're going to hone in more specifically after we just kind of give a baseline and a foundation to the presentation. So Advanta IRA is a self-directed retirement account administrator. We've been in the industry for 21 years at this point. We're approaching $3 billion in assets under management, which we expect to hit that threshold by the end of this calendar year. And what we do differently from other companies in the self-directed space, above and beyond the free education we put out, which you're partaking in right now, is we pair each client with a dedicated client account manager that's your go-to point of contact if you have any questions, if you have an investment you'd like to fund, if you'd like to get money moved in or out of your self-directed account. You have one person that you reach out to. It's not like you have to reach a call center or a wire center like some of those larger companies. And that one person actually gets familiar with you. They're able to answer your questions in the most digestible way for you and the way you interpret things. And they get to know you and what you're interested in so they can help point you in the right direction for the good educational content we offer as well. I speak very highly of that because I spent 5 years as a client account manager before joining the business development team. And it really is a white glove style customer service that you receive with us. Now, a brief disclaimer, Larissa and I are here to provide educational content. We do always implore you when you self-direct to conduct your own due diligence and use your own team of attorneys, accountants, CPAs, financial advisors. If you don't have any of those important people on your team, you can let us know and we can give you some referrals. It's completely up to you once we point you in the right direction of an attorney or a CPA to do your own due diligence and make sure they fit your needs and fit, working with you. But again, when you're self-directing, you're the self and you're choosing the direction of your retirement account investments. So it's imperative that you understand all the different aspects of due diligence and are very comfortable and confident before you make an investment transaction. So just to kind of take it from the top with the takeaway points, I want to make sure I express these to you now, and we'll also express them at the end. So it's kind of foreshadowing, if you will, a little bit. The IRS limitations on retirement investments are simple. You cannot invest into a life insurance policy or a hard-to-value collectible like antiques, fine wine, artwork. You must maintain arm's length away from the investment when you're making a transaction. So we'll get into that a little bit more thoroughly in a few slides. But you cannot really partake in upgrading a property, and you cannot make an investment by buying an asset from an entity you already own or a disqualified person, which we'll cover when we cover the rules. And the third one is invest in what you know and what you're comfortable with, and always do your own due diligence. Like I said on that last slide, it's very important that you're doing your own due diligence and comfortable and confident when you make these transactions. So what is a self-directed IRA? Like I just said on the last slide, it's basically an asset or an ability to hold assets in your retirement account that are outside of the traditional stocks, bonds, and mutual funds. So with a self-directed account, you can hold a number of different asset classes as long as it's not a life insurance policy or a collectible. So a few examples here are real estate, mortgages and notes or paper assets, private placement, so joining your money into a deal that a larger group general partnership team is actually taking control of what's the day-to-day responsibilities. Precious metals, foreign currency, futures, and much, much more. There's such a wide arraignment of what you can do with these accounts. It's really based on what your interest and what your expertise is. You can talk to your client account manager and find a way to utilize those to the benefit of your retirement account. And with the conclusion of this slide, I'm going to turn it back over to Larissa. She's going to cover some information here next.
Thank you, Corey. If you haven't heard of a self-directed IRA, it's just very simply because there's not a lot of companies out there like Advanta holding these types of investments. And so you might have heard self-directed and think, okay, well, my brokerage firm allows me to choose the investments that I want. I get to put any amount of funds into each investment, sell or trade at a time that I feel like it. But these are truly not self-directed accounts. Our definition is a much broader definition of self-direction, where we're talking about you finding the investment outside of the market and us helping you direct your retirement account to those investments. So we actually don't sell anything at all. We simply provide a service where we hold the account so that it can retain its tax deferred or tax-free status. And then you are going to continue to direct and put that money to work. And so if your money is sitting in cash with us, it's not going to earn. You want to put that money to work. And the good news is that it's not an all or nothing strategy. You can move over just what you want to self-direct. And so those investments that we're holding are truly outside of the market, and your brokerage firm just simply doesn't want to hold these investments. They consider them hard to value. They're not really sure how to pay expenses on behalf of an IRA, like maybe a plumbing bill or a roofing bill, and they don't want to be responsible for receiving interest income or rental payments. That's just not how their business is set up. So we sort of fill the gap in the industry for those investments, and that's truly why many people haven't heard of self-directed IRAs, just very simply because companies aren't willing to hold these types of assets. We like to go over very quickly the types of self-directed accounts, because a lot of times people will say to us, well, if I don't have a Roth IRA, I guess I can't buy real estate, I can't invest outside of the US. And the truth is, if it ends in IRA, it can be self-directed. So of course, traditional IRAs are the most common. They're a pre-tax account. A lot of times people are moving their old employer plans into these traditional IRAs so that there's no taxable event in order to move it. But Roth IRA sort of comes in second here. It's the after-tax account where it has tax-free growth. A lot of times people are either contributing directly to a Roth IRA. Sometimes their money is coming from an after-tax employer account, or they're doing Roth conversions, meaning they're taking traditional IRAs, paying the taxes and converting them to Roth so that their long-term growth is tax-free. We also hold employer-based plans like SEP IRAs and Simples, and these accounts are IRAs, which means that we are going to do the plan administration for them. We're going to do the record keeping and the IRS reporting. You can have these plans if you have employees, and they're typically going to be for sole proprietors, independent business owners, and small businesses. You can self-direct, but you do not have to require that your employees self-direct. And either of these plans are great, again, when you have employees, but definitely talk to your accountant and make sure that these plans will work for you and your small business. We also can help you with solo 401ks. Solo 401ks only work for business owners, partners, and their spouses. So this is not for plans. This is not for business structures that have any type of employee outside of spouses. And these are great accounts because they act as a typical employer plan, but they're really geared toward independent business owners. So the elections made in this plan make the most sense for individuals without employees in order to maximize this plan and truly put in up to the limit each year. Now there is a formula, but we have a third type of contribution with our plan where you could really max out this account. If you have questions on any of these employer-based plans, we actually do have webinars in our archives on starting plans for the small business owner, and I'd be happy to forward that to you. We also have up here former employer plans, and the reason we sort of put on there former employer plan is because if you are currently a W-2 employee and you're participating in a 401k, a 403b, a 457, anything like that, the plan is going to dictate whether or not you can move it. But once you've severed ties with the employer and you're no longer contributing, you're going to be able to move that plan into an IRA. It's called a rollover in order to self-direct. So if you are still employed and you're wondering about moving any of that money, you do want to check with the plan administrator to find out if you're going to be allowed to do so. And then health savings accounts and education savings accounts, these types of accounts, although not retirement accounts, they're considered tax deferred strategies or tax free, depending on what you're utilizing the money for. And so the rules for self-directing them are the same. And so we can help you with these types of accounts as well. And any of these accounts can make investments outside of the US. Why do people choose to self-direct? Well, very simply, a new source of capital. They did not know that they could self-direct their retirement account. And so it's like good news. Hey, I can use this money in the investments that I choose and that I know best. A lot of times it's stock market fatigue. You do not have to do 100% of your funds with a self-directed IRA. You can simply choose to portion out some funds, truly diversify, and make those investments that you choose. And that will diversify your account and get you out of the stock market at any percentage you choose. And then, of course, the tax benefits, making investments and having them grow tax deferred or tax free, depending on the type of account that you hold. But you do want to keep in mind that there are some rules for self-directing your account. That's going to be very important, because although the IRS says, hey, you don't have to invest in the stock market in order to grow your retirement fund, you do have to abide by these rules. So you can't invest in your own business or your own personal home or a vacation home. You don't want to lend money to your spouse or to your parents or grandparents or your children or grandchildren. Any businesses or spouses of those are going to be considered disqualified persons and entities to keep you from doing transactions where the IRS says, hey, this isn't really an investment for investment purposes. So you want to look up and down your lineal tree, and then again include spouses and business entities of those people up and down your lineal tree and consider them disqualified persons from transacting, exchanging, selling, providing goods and services to and from. So this IRA investment or this retirement account investment is truly for investment purposes. It must be an arm's length transaction, a third-party transaction, and the purpose of the investment must be for growth in the retirement account. We're going to talk about different real estate investments that we've seen at Advanta, but just keep in mind that just about the sky's the limit when you're talking about investing through a self-directed account. Remember, those individuals on this slide that we just talked about are going to be considered disqualified. And so, for example, you can't buy real estate from your parents for your IRA account, or you can't sell your parents your IRA-owned house for them to live in or even use as a rental property. That would be considered prohibited. But if you'd like to buy single family homes for long-term rentals, as long as you're purchasing it from somebody non-disqualified or unrelated to you, this is an arm's length transaction, and the purpose of the rental is to participate with non-disqualified or unrelated individuals. You can make those investments. It could be long-term or short-term. You can do rehab projects within your IRA, but it doesn't have to be single family homes. It can be condos, mobile homes, and mobile home parks. We've seen people go to tax deed and lien auctions. You can invest in real estate investment trusts and syndications where maybe people are pooling funds to buy larger investments like commercial property, again, multifamily and mobile home parks. So there's a lot of investment options out there for you. And remember that this is not the definitive list. This is just to give you an idea of investments that we are seeing in the retirement account. Keep in mind, guys, that you can ask questions throughout the webinar. There's the question box there for you. Please feel free to type into the question box anything that you want answered, and Corey and I will be addressing those questions as we go. The paper assets within a self-directed IRA, again, anything real estate based, something like a mortgage, so lending money that is tied to a lien, tied to real estate. It could be a mortgage loan or a deed of trust. We do see people invest in things like tax liens and tax deeds. but they don't have to be secured. You can have an unsecured note in your retirement account. The IRS says, hey, you can make these investments. And going back to that slide where we talked about disqualified persons, as long as they're not with these individuals and as long as you and these individuals don't have a current benefit from this investment, you can do it. Debenture notes, option contracts, assignments, joint ventures, and even accounts receivable, all paper assets we've seen within an IRA account. And just to sort of sum up alternative assets, again, keeping in mind that these lists are not intended for you to go, okay, I have to choose an investment from here, but just to give you an idea of what we're seeing people invest in on a regular basis within a self-directed account. And then the truly unique investments or the truly unique side of alternative investing. We see people invest into LLCs. Now, whether that's for a single member LLC for checkbook control or into other businesses, we do see that a lot. We see people invest in farm animals like cattle, alpaca, racehorses, investing into partnerships and movie projects, TV deals. People buy precious metals, gold and silver bars and coins within their IRA account. We've seen large equipment leasing like large format printers and then farm equipment, things like tractors. Forex, and if you're not familiar with the term Forex, it's foreign currency trading. We see people buy private stocks. So Advanta simply doesn't hold publicly traded stock, but we certainly can help you with things like private stock. We have a grocery store here in the Southeast that holds private stock and with employees. And when employees leave, they can roll that stock over and they do it through a self-directed retirement account. We see commodities and oil and gas. And again, any of these investments, as long as they're outside of the market, Advanta can definitely help you.
All right, so I'm going to take back over and apply the asset classes that Larissa just told you about to international investing. So pretty much everything we just shared with you, you can hold internationally. It's just important to note that the same rules apply as investing domestically, and you must verify the legal stipulations where you plan to invest. So that is to say that the IRS is not restricting you from doing anything outside of the country, but the country you plan to invest into may have their own rules and regulations that you have to adhere to. A quick example is if you wanted to invest into real estate in Costa Rica, you need to verify if Costa Rica will allow your US-based retirement account to invest there. There are ways around that if they do not, such as setting up a checkbook LLC in the country of Costa Rica and then holding your real estate asset through the Costa Rican LLC. So that is just a simple explanation. Again, when you're looking into these countries, it's part of your due diligence to make sure your investment asset class that you want to hold is allowable by your US retirement account. And if not, work with those rules and regulations and your client account manager to figure out the most efficient way to hold that asset. It's also important to be careful when any investments made with currency changes, because you will need to convert that currency back to US dollars and make that money flow back into your retirement account with us before you process any distributions to basically take money for personal purposes and personal use. So holding the assets through a custodian. When you choose to do this, that basically just means you're going to let your client account manager know, hey, I want to invest into XYZ. And your account manager is going to provide you an instruction email of exactly how to hold that asset class and what paperwork you need to provide us to execute that investment transaction. And then we're going to facilitate all the documents for that investment transaction. And then we're also going to facilitate holding the original documentation and any cash flow in or out for that asset. So cash flows in, it's going to need to come to Advanta IRA for the benefit of your retirement account. You get an automatic email notice when those deposits are made, and you also can check your online portal to see those transactions, generate statements, generate reports based on whatever criteria you're looking to review. So it's very simple and smooth and seamless from that standpoint. And again, your client account manager is there to assist you further when you have questions. If your investment completes a full life cycle and you decide that you want to sell that asset or take a personal distribution of that asset, you simply need to coordinate providing an updated valuation of the asset. Or winding it down, selling it completely, and having the cash flow back into your retirement account. But if you want to take it in kind, let's just say from my previous slide, you buy some property in Costa Rica and you are ready to retire, want to use that property for personal purposes. Just kind of recalling the rules there with you can't use it while it's owned in your retirement account. You'll have to get a qualified valuation done, and then you'll have to take a distribution in kind of that value and have a deed drafted up and executed so that the ownership of the property goes out of your retirement account into your personal hands, and then you could start utilizing that property for personal purposes. Again, it's very important to make sure that you're coordinating this with your account manager so that they can help you and make this as smooth as possible for you. You've already done the work of doing the due diligence and finding the deals. Let your account manager help you and do the work of getting the thing done that you're trying to accomplish, whether it's buying an asset, selling an asset, maintaining an asset. That's what we're here for, and that's what we're experts in. So another way you can hold these types of assets is through an LLC, which I referenced with that Costa Rica example. So you may choose to, or even be required to, set up an LLC offshore to hold these types of assets. It's very simple in general to set up these types of LLCs. You would follow the same protocol as a domestic checkbook IRA or single member LLC. We've got tons of educational content on that strategy that you can review with us or just speak with your client account manager. But it's as simple as registering an LLC in the appropriate jurisdiction, getting a tax ID number for that LLC so you can open up a bank account, and providing a operating agreement so we know and the IRS knows the regular action plan, intentions, and protocols for that LLC if you ever want to wind it down in the future. If you're doing multiple members in the LLC, who holds what percentage of ownership, who has the management responsibilities for this LLC. Very basic, very simple, but important to set up thoroughly so that you don't run into any issues in the future. When you're using this strategy, you can add more money into the LLC in the future. You don't have to be limited to what you can add at the first point in time you want to set it up. And then also, when you're using these types of entities, it's important to be aware when you reach required minimum distribution age, which is currently 72. I believe there's some legislation to push that up to 74. For many of the people in the audience, by the time you reach that age, it may be up to 80 or 85. Who knows? I'm in my early 30s. I hope it's a bit later than 74 by the time I'm there. But be mindful when you reach RMD age, you're going to need to be able to either take assets in kind to satisfy the required minimum distribution amount that you're told at the beginning of each year, or have liquid assets so that you can get cash out and take cash out of the account to satisfy your RMD total. And also, real quickly, I do want to also share a little bit of tidbit of advice or tip. You can take your RMD amount from any retirement account you hold. So let's just say you have a managed account that's invested into stocks, bonds, and mutual funds, and you have a self-direct account. If you're told from your self-direct administrator your RMD for this year is $14,000, you can go take $14,000 out of your managed account that has more liquid assets. As long as you take the full amount that's required as your RMD in total, you can take it from whatever retirement accounts you hold that are tax deferred to satisfy your RMD requirement. So hopefully that helps some of you that may be interested in buying some illiquid assets and also be coming up against the RMD requirements as well. And then the final slide before I turn it back over to Larissa, just a few other things to know. Currency exchanges happen at the bank level. So if income is sent to the investment provider, from the investment provider to your Advanta account, the bank is automatically going to exchange it to US dollars upon receipt. This will happen at the rate at the time of the receipt. There's no fees, but be aware that the change in exchange rates. I've seen clients do investments in Canada before, and they weren't aware of this. They weren't so happy when the exchange occurred because they could have waited a few days or for whatever reason thought that the rate would be different if they structured it a little bit differently. So it's just important to be aware and be mindful of these things as you're investing internationally. Normal wire fees would apply, and keep in mind there's typically a bit of a higher wire fee for international wires as opposed to domestic wires. Advanta requires an English translation of all the documents. At this point in time, we just don't have staff that is, too lingually versed. We are actively growing, so maybe that'll change in the future, or technology may, appropriate some translation intuitively. But as for right now, we are going to need to receive all the paperwork for your investment transactions in English. Current benefits to the IRA holder would make the transaction prohibited. So for example that I used earlier, if you go use your retirement account to buy a house in South America, you cannot go benefit from it, utilize it, vacation at it until you take it out of your retirement account for personal purposes. Even if it's international and you have citizenship over there, this is basically seen as your retirement account being one entity and you, the human being a separate entity, and you should not benefit from the retirement account entity or vice versa, to stay in line with the IRS rules for prohibited transactions. Larissa, do you want to go ahead and take over for the first case study, and I'll cover the second one?
Yep, absolutely, Corey. So now Corey and I are going to go into case studies just to really illustrate how these transactions can work for you. And keeping in mind, again, that Corey mentioned we need all documents in English, and also to make sure that you're understanding what is going to be required for your transaction, because Advanta does not do this due diligence for you. And we have seen a lot of investments outside of the US, and we are always leaning on our client to tell us, okay, this investment is going to require X, Y, Z in order to accomplish it, because it's in whichever country they've chosen. So in this example, Stephen has a large retirement account savings and decides he wants to own real estate, or a rental bungalow in South America. He researches legal restrictions in several countries of interest and decides to buy in Ecuador. He plans to hold property directly in the IRA without checkbook control. So first, Stephen is going to open and fund his IRA account. We're going to assist him with that. Of course, we're going to provide all of the account opening documents he needs, and we're going to show him how to transfer funds over to Advanta. And in this case, if it's coming from an IRA, we're actually going to assist him. If it's an old 401k, we're going to give him the information he's going to need in order to start the rollover. He's going to submit all of his investment documents over to us with his stamp of approval. So basically, he's going to read and approve all of the documents and send them over to Advanta. And then we're going to review those documents just to simply make sure that the IRA is named as the investor rather than Stephen himself. We're going to coordinate the closing with the attorney or agency responsible for purchasing the property and receive any original ownership documentation for safekeeping. Once we close on this investment, we'll pay all of the expenses related to this investment through the IRA at Stephen's guidance. He's basically going to go on to his online portal, request checks for any expenses he has, and then he's going to receive any income directly to the IRA account. So he is really truly going to oversee the investment. So he's going to request any checks, as I said, and then Advanta will pay any expenses the next business day. So when he goes in and says, hey, the rental agency, for example, says that I need to add more furniture to this property, please pay the rental agency. In the event that he is using somebody to place renters, then we will do that at his discretion. So he's going to tell us to do it. We're going to submit any checks, and he's going to give us the information as to where we're mailing those checks to. He can hire a property management company, or he can oversee the property, but he does not want to provide any sweat equity. So I know a lot of you are out there thinking, okay, well, can I visit the property? Can I go out there and make sure that everything is going well? You could, but you don't want to stay at that property. That would be considered prohibited. But maybe sort of the better way to do it is to have boots on the ground in whatever country you choose, so that you can pay a property manager to oversee and check on that property for you. And if you decide that you need to visit that property, I would suggest talking to an attorney to make sure that you're doing that in a way that best suits the IRA and within the rules. Tenants, renters, property managers will send the IRA proceeds directly to the retirement account so that we can deposit it. You want to make sure that you're not receiving and depositing any income for the IRA to your personal account or to your personally owned LLC. The IRA needs to receive that income directly. And then Stephen decides all rental terms chooses the tenants, the renters. And so if this is a long-term rental, a short-term rental, he's going to determine all of that. Is he posting it on a website? Is he working with an agent in order to place individuals? If it's a short-term rental, who is the cleaning company? How often do they come? Who provides the keys to the tenants? Stephen's going to determine all of that. He just wants to make sure that he's not providing sweat equity in order to do so. Funds flow back into the retirement account and must be US dollars. And be mindful of currency exchange rates and requirements. And I think that's a question we get a lot when people are investing internationally. How does the exchange work? Well, let's hash all of that out ahead of time so that you can understand how the exchange rate will work when money is coming back to the retirement account. So using a property manager is something that you should consider when you're looking at real estate outside of the US, but it's not required. Property manager receives the income and pays the expenses for you, and again, is sort of boots on the ground for you in the country you choose to invest. The property manager in this case would write checks for those expenses. And if you're partnering with yourself or partnering with non-IRA holders, this could alleviate the need for 2 checks in those cases where you're partnering with non-IRA funds. So if you're partnering with personal funds, or if you have a non-IRA partner, the IRA can only write checks for expenses for its share. And so if you have some expense come up, the non-IRA share would be a second check. But when you're using a property management company, of course, the property manager will write checks, receive income, and then portion out those funds to the IRA and non-IRA partners in this scenario. And so that might be helpful when it comes to management of this property.
So real quickly, what Larissa just went over was specifically a property investment internationally, but the same principles would be applied to any other asset class that you want to invest into directly, again, through the custodian with your retirement account. This case study number 2 I'm going to cover is if you want to utilize the LLC strategy, or if you have to utilize the LLC strategy based on the country that you're planning to invest into. So as we went over earlier, it may be required because that country may say, oh, we will not allow US-based entities to invest directly here. So you may have to set up an entity in that country, a single member LLC, or potentially multi-member, but for this case study, I'm going to cover single member, and then invest with that entity that is based in that country into these specific assets that you'd like to hold. So for this case study, I've got a gentleman named George. He would like to establish an LLC overseas to hold public stock in a foreign market. He determines the country and procedure to establish the LLC there. Then he sets up a self-directed account, which is a very simple process. Our application can be done via DocuSign. It takes people about 15 minutes to complete. We get the money moved over via transfer or rollover, which Larissa covered earlier in the webinar. Typically within about a week to a week and a half's time, you're ready to get this LLC set up and funded. So the operating agreement, the Advanta purchase paperwork, and the funding instructions need to be provided to the account manager so that we can execute the transaction and send the funds via check or wire into the bank account that George establishes. From there, George manages all the activity for the LLC and communicates with Advanta if he has any questions about the IRS compliance, or what we basically require at a minimum is a valuation of that LLC once a year, typically at the end of the year. And it doesn't need to be too thorough or detailed. It's very simple. Just put together a spreadsheet of what assets you hold plus the balance in the bank account cash. And then that spreadsheet should give you a grand total of what your LLC is worth. You fill that out onto our fair market value form. And I've also got some brief webinars and really short guides on YouTube for how to properly value any asset class that you may want to hold. Advanta's responsibility here is making sure the operating agreement lists George's retirement account as the member and George as the manager. We collect approval from George on all of this investment paperwork. And again, we execute the transaction by processing that paperwork and sending the funds out for the LLC's bank account. And then we assist George when he has any questions about what type of investments he plans to make in his foreign market. In this case, it'd really just be setting up a brokerage account in the name of that LLC and then managing the brokerage account either directly or with a fund manager to choose what assets he holds in that brokerage. For this entity operating agreement, it's going to need to name the manager, which again is going to be George and potentially any other appointees he would like to have managing the LLC. The LLC should always be manager managed. Put into perspective, as I said earlier, your retirement account is a separate entity than you are. And your retirement account as an entity that's not a human being does not have the capacity or capability to make management decisions. You personally, as the account holder and a human being, are the only one in this structure that can make decisions on behalf of the LLC. All the members and the percentages are going to be listed on what's typically a Schedule A of the operating agreement. So we know how much you're putting in at the outset of the LLC setup. And then we can keep those percentages, if you're using multiple members, consistent as additional contributions come into this LLC, or you start to take distributions out of the LLC. When you set it up, the ownership percentage, which in a single member case is going to be 100, but if you're maybe using your own retirement account and your spouse's retirement account, the ownership percentage is going to be based on the initial contribution. So if you have $50,000 and your spouse has 50,000, it's going to be a 50-50 ownership. If it's 75-25, whatever the dollar amount that constitutes the initial capital contribution into the account breaks down the ownership percentage, and then the cash flow in and out of that LLC must always match that percentage. So if you want to take $10,000 out and you have a 50-50 split, your other partner is going to need to also take $10,000 out. If it's 75-25 and you want to take $10,000 out in total, then you take 7,500 out and your partner has to take 2,500 out to keep the ownership in line with what it was originally set at. If the operating agreement is drafted by yourself, that's perfectly fine. You can use an online template. You can also go to an attorney. We have some we could refer you to. They're typically going to charge you a few $100s, but they're going to do all the legwork for you. So depending on your level of interest and involvement desired, it may be worth it to you to have someone set this up for you, or it may be worth your time and energy to save those few $100s out of your retirement account to just do that yourself. Again, you can typically just do a simple Google search. You can go to Rocket Zoom or one of those, Rocket Lawyer, one of those types of websites, and get an operating agreement from there, or have a trusted attorney handle that for you. We can provide referrals for domestic setup. You may need to find your own professionals if you're looking to set up an LLC outside of the US. If you do find a good one outside of the US, please feel free to refer them to us. We'd love to generate those relationships as well. We just don't actively have any. So, looking at to this case study a little bit further, once the LLC is formed and funded, any deals will be in the name of the LLC. Through the LLC's tax ID number, George as an individual should not be taking title of ownership, nor should George's social security number be listed on any of this investment paperwork either. He will sign and execute all trades and all investments as the manager of the LLC in that specific capacity, but making sure it's all documented in the name of the LLC. As he moves forward with investing, he decides to diversify into the country, into other assets than the brokerage platform and their publicly traded assets. He can purchase real estate, issue loans, become a limited partner in deals, or even own livestock and anything else that Larissa covered earlier in the webinar. We have a separate webinar that we do on the most unique investments we've ever seen. So again, I have said this multiple times already. Use your expertise, use the things you're interested in that you know maybe in your personal life how to generate income and good returns, and turn that into a passive income generating venture with your retirement funds. It's a great way for you to take more control, be a little bit happier with the assets you hold, and have a little bit more vested interest as opposed to just publicly traded stocks, bonds, mutual funds. Maybe you're not familiar with them, maybe you don't trust them. That's what self-direction is all about, is putting the power in your own hands for your retirement dollars. So key takeaway points. I'm sorry, actually, I believe Larissa was going to take over for this one. I read this slide earlier. We're just making sure that we for lack of a better term, just beat these home and that these are what you're walking away with.
Exactly, Corey. And, I think it's a lot of times I like to refer back to these slides just very simply because it's a lot of information we're sharing here. And so when you're talking about the rules, the different asset classes, things you can and can't do, what you need to know about international investing, we really want you to at least walk away with these key takeaway points. So the IRS limitations on retirement account investments are simple: no life insurance and no collectibles. And outside of that, the sky is just about the limit, including internationally. You must maintain an arm's length away from the investment asset. So again, you're not buying a vacation home with this account. You're simply making investments for investment purposes. And invest in what you know or what you're comfortable with, and always conduct your own due diligence, because Advanta does not do that for you. So especially when you're investing internationally, again, things like understanding what the country will require for you to make those investments, knowing if you're going to need a specific type of entity in order to invest within that country, and how will you handle that investment? Meaning, do you have a property manager if it's real estate? Do you have an attorney in that country or boots on the ground? Or do you have somebody stateside that can help you and has knowledge of those investments? So all very important points when you're investing internationally. We have a lot of events going on all the time. They're always no cost, no obligation. We usually have 2 webinars a week. I know myself, I have a webinar next Tuesday where I'm going to be talking about contributions and key deadlines coming up as we near April 15th and tax filing deadline. But we have something always going on. And if you ever have an event that you miss, almost everything is recorded with the exception of our networking event. So you can always go to our video library and check out anything. If you register, you will receive the recording to anything, including this webinar today. Again, the video library has everything archived to it except for our networking events. Our networking events are on the last Friday of every month. You do have to register, but then everybody has the opportunity to talk about what they're looking for or what they have. It's sort of a pitch session, and we invite you to join us for that. You can check it out and register on advantaira.com/events. And then we also do have our blog where we're keeping up with the latest industry news, updates, and insights from our team of professionals.
One additional plug before Larissa jumps on to getting started. We also have a podcast. So these types of educational webinars, even when we bring on guests, are educationally driven. We're not allowed to pitch or promote specific deals. That's why we have our networking call that Larissa referenced. But we also have a podcast that is hosted by our colleague Alex Perney. It's called the Alternative Investing Advantage Podcast. And he has a little bit more flexibility and freedom when he brings on guests to speak about deals, to speak about nuances that we can't necessarily do on these educational webinars. So if you're interested in that more in-depth content, go ahead wherever you get your podcasts and check out the Alternative Investing Advantage Podcast by Advanta IRA. Sorry, Larissa, go ahead.
No, that's a great point, Corey, and it's another good way and just a different format to get education from Advanta. It's really easy to get started. You open your account, reach out to Corey, myself, or anyone at Advanta that you might be speaking with in order to do so. We give you the application packet, which can be done online, and then we have one additional form for you, depending on where you're moving your money, either an IRA or an old employer plan. We pair you with a client account manager, somebody that is going to be dedicated to assisting you with making your annual contributions, transactions, paying expenses on behalf of your investment, and helping you with those investments. We will help you fund your account upon opening, again, by way of a form we have you complete, and then you're ready to find your investment. And a lot of times, people are already looking for their investment or already have it found when they open the account, and that's okay too. But just be aware of some timelines. It takes anywhere from 7 days to 30 in order to get your account funded and ready for investing. So we just want you to be aware of that, and we can give you more specific deadlines and timelines if you reach out to us. Again, my name is Larissa Greene. I am partnered today with my associate Corey. We're here to help you. Our contact information is here on the screen. I didn't see any questions pop up, but we're happy to take them. We'll leave the webinar open for just another minute in case you do have any questions on investing internationally. And I think that is it as far as slides go. Corey, did you have any additional comments you wanted to add?
I'll just throw out a quick promotion to our networking event that Larissa referenced. It's called Pitch, Promote, and Prosper. So if you are looking for deals or you have deals to offer, you can join that call. We typically do it on the final Friday of every month. We won't be doing it this week with respect to Good Friday. I actually co-hosted that with my colleague Renika last Friday, but we should be back to the final Friday of the month next month. You can go to our events page on our website and register for that. You do not have to be a client of ours. You do just have to be a like-minded investor looking to network with others, bring deals to the table, or explain what you're looking for and maybe how much money you're looking to invest. It doesn't have to be with your retirement dollars. We prefer it to be, obviously, but it's a collaborative network where we're trying to bring people together that can learn from each other and build from each other and hopefully invest with each other for positive experiences. So you can check that out. Uh, if you also would like a copy of today's slide deck, you can email Larissa or I, and we can very happily provide you a PDF of today's slide deck. Or you can wait. It'll be the presentation posted and emailed to you on our YouTube page within about 24 hours. So you could really watch this back at your own pace, pausing, fast forwarding, or winding at your own discretion. If maybe we covered something too fast, or you want to review something additional that we mentioned that you just didn't get your own notepad out quick enough for today, or reach out to us directly one-to-one. We're always happy to answer and help you with anything. Still not seeing any questions, so I think we're ready to wrap up, Larissa. Thank you so much for doing this with me today, and I look forward to the next one we do together.